You can feel this. Monthly mortgage payments have soared under Biden's presidency. You're going to tell us by how much?
Double. That's not good.
Ooh.
He's only been president for 3 years. Data from real estate investment firm CBRE shows average monthly payments on a new home soared to about $3,322 in the third quarter of this year, marking a staggering 90% increase since late 2020 when it hovered at just $1,746, of course, before Joe Biden took office. Now, Stuart, this is key. This example uses a $430,000 home with a 30-year mortgage and a 10% down payment. We're not talking $1 million home here. We are talking the average American home. That is really bad for the average American.
Yeah, you got that right. Thanks, Todd. Real estate guy Mitch Roschelle joins me now. Mitch, I see two maybe positives for the housing market. Mortgage rates below 7%. The stock market's rallied so some people can buy cash for their homes. Is there a glimmer of hope for real estate now?
Oh, Stuart, it's the holiday season. There's always a glimmer of hope. But I would say this, and I said it on your program, I think the last time I was on with you. If interest rates come down, beware, there's going to be a housing boom because there are so many people waiting on the sidelines. And I do think we're going to see mortgage rates come down, certainly in 2024. So I think it's more than just holiday hope. I think we're going to see things happening again in housing. The problem is demand still exceeds supply. So if people sort of come, out of their homes looking for new ones, we could see prices go up.
But interest rates down means home prices may actually start going up again next year. Is that possible?
Right. And I think Goldman Sachs said the same thing. They said modest, and I think it could be more than modest. The other thing I just wanted to attack was this, the stock market rally that's going on and sort of that fueling some, enthusiasm about housing. I would say the house that Todd referred to, the average American home, that first-time buyer generally doesn't have money in the market. I would say they generally don't. But when you have a wealth effect from other investments, again, it's one of those things that fuels sort of enthusiasm and people's willingness to, take that risk and buy that asset. So I have a feeling that we're going to see, not a stampede, but we're going to see people come out of the woodwork. If rates stay in the sevens, it's still going to be out of the reach for many. But if for some reason rates fell into the sixes, I think it's going to be sort of back to the future with the housing boom.
Just want to get back to this stock market rally fueling help for the real estate market. But this applies to the high-end stuff, doesn't it? Because a lot of high-end people have done very well in the stock market. They borrow the money against their securities, against their stock holdings, and buy like that full cash. We saw a lot of that in a couple of years ago. You think we're going to get back to that now?
You mean besides you and I who did that?
Yes, besides you and I. That's right.
Yeah, exactly. The problem is those rates that the brokerage firms are charging are now up to 8% for those portfolio loans, and I have not seen them come down. So we would have to see those portfolio loans, the loans when you borrow against your stock portfolio as opposed to selling a stock and paying gains on the sale. We would have to see those loans come down dramatically. But if the prices hold in the market and the rallies, continues, I would see those, the UBSs, the Morgan Stanleys, the Merrill Lynches starting to offer those portfolio loans again.
I bet they do. Mitch Roschelle, have a great weekend. I'll see you again real soon. Thanks a lot, Mitch.